Now, joining me for a look at what's driving local markets is Rhynhardt Roodt, who is equity analyst at Investec Asset Management. Hi there, Rhynhardt. I've just been talking to the boss of the JSE, and as I was saying, their money comes essentially from trading. The more people trade, the more money they make. In good times, they just have to sit back and watch. I know I'm simplifying it. But looking at that market, it was interesting hearing Nikki say that their earnings were pretty flat, but compared to other exchanges, that looked pretty good, in fact.
Yeah, look, I think that is quite an interesting comment. I think my take on it would be that, globally, I don't think that equity markets have been that much in vogue. I mean, our market relative to many other, say, equity exchanges have done extremely well. Foreigners have been actively involved in our market, and that's fairly evident in the large foreign shareholdings of quite a few of our companies. But you're starting to see, slowly but surely, I think investors coming back into the equity market, and you can just look at, the S&P, the Dow, etc., trading at new all-time highs. It kind of shows that I think, broadly speaking, I think investors are starting to become a little bit more optimistic, slightly more confident in global growth prospects, and thereby switching out of bond markets and into equity markets. And if that trend does continue, then a stock like the JSE should actually do quite well in the coming years.
Let's just take a look, Rhynhardt, at what the JSE was doing today. Yesterday there was quite a strong rise, around about 0.7%. Down slightly today. A couple of the big industrials were down. Imperial down by over 3%. Gold was the one area where we were up, and some of those big mining companies were up. So your assessment of where the exchange is at the moment? We touched 41,000 yesterday.
Yeah, look, markets have had a very good start to the year. I mean, January was a big month. February was slightly softer, and then again now we've had a great start to March, largely driven by kind of large cap industrial shares, those kind of large rand hedges like South African breweries, Rhynhardt, British American Tobacco, etc. Obviously aided by a fair bout of rand weakness. So what you're seeing today is perhaps just some consolidation for the large cap industrials, and then investors trying to maybe bottom fish a little bit in the kind of large cap resources sector, which continues to lag the markets. I think a lot of market commentators would I think like point out that value is perhaps to be had in the resources sector. But so far we've all been well proven wrong.
Let's move to Cash Build, which reported today a revenue plus 2%, profit profit up 3%. I don't remember numbers from Cash Build like this in a decade.
No, not. It's a very well managed company. It's a stock that we've liked as a house for many years. We rate the management team. We like the business model, but it is a bit sign of the times. I think the group has done phenomenally well the last couple of years, kind of growing into that kind of middle to lower income segments. And if I look at the SA consumer, that's probably the market that is at its weakest at the moment. We've got this major debate raging around unsecured lending in that space, and so perhaps that's starting to bite them a little bit. The construction sector isn't really showing a lot of signs of life yet, so they're just getting it from all fronts really, and it's a well managed business. They've managed to control their costs very well over the last couple of years, so it's already being kind of run fairly lean and mean, so there's not a lot of cost cutting that they can do. So trading conditions have certainly deteriorated. The share has done very well for, I think, its investors over the years, but right now I think it's fairly clear that the group is struggling a little bit more than before.
I suppose they'd been pushing it for some time, and I remember when Pat Goldrick was the chief executive, he explained how in the rural areas the impact of the social grants, we've got 18 million people on social grants now compared to 3 million or so a decade ago. And what isn't often measured is how people who are on those grants pool their money, particularly in rural areas. And at the height of that recession, Cash Build kept on growing. Now, clearly that has now run out of steam as well.
Yes, definitely. I think social grants will continue to support the market, although I think the marginal benefit from social grants right now going forward is probably not going to be as great as what it has been before. I think what's kind of starting to bite that area of kind of the market now is obviously the job market. We kind of see it here in the mining sector, a lot of the gold mines, platinum mines, etc., shedding their labour force. So that is having an impact. I've already referred to the unsecured lending market. It does look to us that quite a few of the consumers in that cluster of the market has taken out a lot of unsecured loans. They're fairly heavily indebted, and now you've got factors like the rand petrol price is at all-time high, so transportation cost is quite high, which affects that lower-end consumer quite significantly, and that is really the cash build market. At the other end of the scale, you've got the high-end consumer, and that looks still relatively healthy to us, and that is, again, you can just look at the numbers of a company like say Woolworths that sells to that end of the market, and the numbers are radically different.